Hey guys, Fit Trader Chick here, coming at you with a very important lesson on trade management and risk management. So basically, I'm going to mark this chart up as I go to show you my thought process on it and hopefully help you understand better how to manage your risk properly on specific trades depending on the price action. So I'll start with my first trade of the day, which was FSM, and FSM was a silver miner company, and in relation to that, silver, which the ticker for that is SLV, has been making new highs recently. It's been kind of in a rally mode, and just zooming in on the intraday, the 2-minute chart here, you can see that this dotted line is market open. So you could see that it was really respecting areas. It was respecting the low of day. It held as support this morning. It respected the high of day and then finally broke through it to make new highs, and it looked like we were going to just continue on with the rally. So this morning I entered FSM for a long. It gave me a really nice intraday pattern. So let me just start by marking up the daily chart. So you could see we had this nice run, pullback, continuation for a break of this high of the previous run right in this area here. And so I went ahead and I entered once I had an intraday break pattern, and I'll show you that on the intraday chart. So basically, I pulled some extensions here. I pulled from the gap, and I also just pulled from the pivot here. And I was getting this 473, 474 area, so I was a little leery about that because the risk to reward is not very great with this confluence at this level. But silver was on a rally, and I've seen before where these extensions don't mean a thing when you have a true breakout happening. So I took the risk on it, and I went ahead and I got in with this intraday breakout pattern here. So here's my 2-minute chart, and you can see the volume yesterday. It's very just splotchy price action, spotty price action, I should say. So when I saw this really strong volume, oh, where'd it go? What happened? Sorry. So when I saw this this stock open with this, these really strong range-bound bars, I was thinking to myself, okay, well, this could end up being a big volume day, especially with silver, looking like it could make new highs and so on and so forth. So I went ahead and entered on an intraday break, and you can see that this trade failed, obviously, but let me go through my thinking on this. So you knew from the beginning that I was a little hesitant about this confluence area around this 474 level. And also, that was not only confluence there, but I had a resistance level from prior resistance around here. So I had a lot of confluence into this 474 level, a lot telling me that this stock's not going to go much higher than that. And so I was very cautious, and I knew that if the price action wasn't showing properly, I was probably going to be taking a graceful exit on this if it didn't go. So I also pulled a trend line on the daily chart right here, and I'll expand that for you. So you could see this trend line was hit here, here, and again today for this breakout play. So that was so this is some pretty heavy resistance. I have a daily trend line here showing resistance at this level. I have confluence with 2 different extensions that I pulled, and I have a prior resistance level here. So the odds of this going past that weren't looking too good. And I was doing all this as I was managing the trade to really get a feel for how I should take care of my risk. So once this went, it kind of started making higher highs, and then I was thinking, okay, well, I would want this level here to hold. So this is back to my 2-minute chart. So if this level doesn't hold, I'm going to be looking to possibly take a graceful exit on this. My original stop was below the low of the day, and once this stock started moving and started showing me some price action, I could decide if I really want to take on all that risk, or if I maybe want to move my stop up to maybe a break even or maybe to a specific pivot low. So once this edge started holding right here around this 473 level, or 464 level, sorry. Once this edge started holding, I was like, okay, let me go ahead and move my stop behind this edge, because if this edge breaks, this trade very likely could fail. First of all, it couldn't break through 70. 70 is a nice big round number. It couldn't break through 70. It tried. It came back down for a little bit of a pullback, put in this nice support level here, and if this support level broke, I was anticipating this trade to completely fail. And that's exactly what happened. So you can see that once this edge broke, I actually had my stop right here. I don't think I got any slippage. I had my stop a few cents behind this edge break, because sometimes you'll see price slam down and then slam back up and go in your favor. So you don't want to be too close to that edge. So I gave it a little bit of room just in case, but not too much to where it would hurt me, financially, or with the risk that I had on the table. So I was able to pull my risk from this 455 level all the way up to this 462 level and save on all the difference between the two, because I knew that if this stock failed from this level, we could definitely anticipate this trade to fail. So you could see that if you can just be one step ahead of the market and try to anticipate what could happen, what the mass majority of traders are going to think at a specific level, or if a specific level breaks, you can really minimize your risk and go from losing all the way from back here to just right below this pivot or this support level that didn't hold. So, basically I just wanted to show you guys how you should always be marking up your charts, and you should always be watching to make sure that a specific level is holding, or maybe anticipate it breaking, and decide what are you going to do if you look at all the possibilities and probabilities of what a stock can do and what price action can do. You have to be one step ahead of it at all times.